All right, guys, welcome back. Welcome back. We're going to continue on today with some of the things that you're going to have to adjust yourself to when you're transitioning from crypto trading to futures trading. Okay, so first off, we went over last week that you're going to have to create some kind of new exchange. So, me personally, I am using Atas. You can use Quant Tower, you can use Atas. And then you are going to have to, well, so for Atas, and this is Atas, and Atas is just like TradingView, except you're basically designing your own platform from scratch. I mean, you can have everything: heat maps, delta, TPO, footprints. It doesn't matter what, but you're going to be designing everything from scratch. If you want help with the template, please get in the chat, DM me. We can create your templates. We can see what's necessary for you. And we are going to go over a little bit about that today. But one of the biggest things that you're going to immediately have to get adjusted to is choosing the right ticker. So basically for the ES and the NQ, you're going to have two different tickers or contracts that you're going to have. So one, if you see up here in this corner here, you're going to see the ES exclamation mark. Now this is a continuous contract right here. This contract, if we zoom on out here and we go to the monthly, we're going to see that we have data here. We have never-ending data, right? We can come here and we can get our support resistance. We can see this asset over time. Now, you're not going to be trading this asset. You're going to be trading the current contract. So as you can see here, this is the monthly chart of the ES. Now, if we go here and we go to the most recent contract, which is currently ESM 2026, if we come here, we're not really going to have that much reliable data because the contract only began recently. So I would highly suggest doing your high time frame analysis that you keep on your continuous contract, and then you transfer that over. Now, how do you transfer this over? So as you can see here, I've got my stuff, right? And so I'm going to come here and I'm going to bring up some of my TA. Now, what you can do is you can click on this TA. You're going to right click on this weekly, for example, and you're going to come on down here and you're going to say sync globally, right? And now what this is going to do is this is going to sync all these levels globally on every contract, right? Everything ES. So as you can see, same thing for the NQ. If I come here, I have the continuous contract, or I have the continuous asset. If I go here, you can see that back here it gets a little bit foggy. I don't have much reliable data. So that's going to be a big thing, is choosing the current contract. We went over a little bit last week about how the contract has codes, NQM. M is going to be the expiration, and then 2026 is going to be the year. Now you're going to have contract rollovers, right? You're probably used to, if you're trading Bitcoin, if you're trading crypto, is you're used to what's called the perpetual contract, right? So this is going to be continuous. You have it, you own it in perpetuity. As long as you keep on paying that funding rate, you can hold on to that position. It's not the case when you're going to go over to futures. Futures is going to be a little bit different, meaning you're going to have to change contracts. So you always have to be aware of that. So another thing that I want you to be aware of is that regular trading hours. I'm going to go here, right? And we're just going to go to the ES, right? And so you're going to be running into, now, the ES has regular trading hours, which is New York, and then it has electronic trading hours. And this is going to make sense. So if I come on down here, this little cogwheel on the corner. Oh, you don't have that cogwheel. You can't see that, can you? Anyways, if you go down here to the bottom right-hand corner of your chart, and you're going to see right over here, it's going to say session. So if I click on that session, I got to move myself, man. If I go on that session, I'm going to see that it says electronic trading hours. I didn't really plan this out. Oh, good Lord. All right. So it says there electronic trading hours and regular trading hours. So if I switch this, I'm going to have gaps. Right? This is going to be important because you'll see here when you're trading Bitcoin, if you're trading the CME, you're going to have gaps in these trading hours because New York session and then electronic trading hours, which is basically the London market. So you always want to be aware that you want to switch on and off here so you can see the gaps in trading because there is an entire strategy that will get into gaps, right? And so another big thing is when you're transitioning from crypto to futures, you're going to notice that if we come here to the daily chart, you're going to see here that in crypto, it's very easy because it continuously changes. Or it continuously trades. So you're going to notice that when you're looking at support and resistance and you're looking at levels, there's going to be these little gaps, like these closes and these opens. There might be these little gaps here, right? So it's kind of the same theory when you're getting your support and resistance. Like if we're looking for a daily support, what we're looking for one candle to be followed by an opposite candle that moves away, and we always want to use the bottommost point, right? And so we're looking for this. This is going to be like you're seeing here, down, 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 red candle, green candle, right? The lower is always going to be our support. And same way is that the higher is always going to be our resistance, right? Anything that travels through that is considered tapped. Like you come up here, we can see here, green up, 1, 2, 3 days up, red resistance. And then right here, we did come back and we tapped that level, and then we saw a nice move to the downside. So when you are getting your support and resistances, always just remember that you want to trade the higher of the two, right? Always keep that right, keep that in mind. So now to the meat and the bones of it, right? One of the things that you're going to learn that when you're transitioning from crypto to futures is that your trading IQ, what levels matter? How are you going to get your really good levels? What levels are very responsive? And so for this, I'm going to highly suggest that you're going to start understanding TPO. Now, what I'm going to do is I'm going to go to a 30-minute chart. I'm going to go onto the electronic trading hours, just so it has a nice flow to it. And I'm going to go up here to indicators. And what I'm going to do is I'm going to show you this indicator. So you're going to go for time, price, opportunity. Now, I'm not going to get too much into tick size and all this and that, but I just want to show you TPO and how it's going to be useful because it's going to be some of the most responsive levels when you are going to be trading futures. So right now, what we're looking at, and we could even get rid of the candles, what we're looking at is how value is migrating. So what's going to be important on these levels? So just like value, what's important is the point of control, the value area high, the value area low. Now, we want to be aware of naked levels. To see these levels, what we would do is we would click on this. We kind of double click on this TPO. And you're going to have a lot of options. Some of the most important options that you want to do is you want to extend this POC, these poor highs, these poor lows. You want to extend single prints. You want to extend your value area high, your value area low. And you also want to color coordinate these. Now, I like to have mine sky blue and red hell. So I know that when I'm looking at this, anything on the upside is a naked level. If it's blue, it's a high. If it's red, it's a low. So right now what we're looking at is we're looking at the weekly volume and value of the ES, right? So if I wanted to do some TA, I might do something like this. I might come here and just project a line, and then a line here. Now I have my preset formats. So I just need to right click on this. I go down to templates. So this is a value area high because it's this current week, right? And so this is previous month, naked monthly value area high. From the month before that, I have a naked monthly value area high. I like to put these, click on this, click this little file button, and then I like to just drag everything into this, and I'll even name it naked levels. All right? And then that way I don't have to have it muddying up my charts. All right? So I can just kind of get this. It comes and it goes. So then you might want to come here and you might want to double click on this. So right now we're looking at the monthly. Let's go to the weekly. So now what we're looking at is we're looking at weekly levels, right? So I've got this is my poor low, right? So this is why you really want to get into your color coordination, because this line right here is a value area high, right? This line right here is a poor low. So this is also a poor low. So what I'm going to do is I'm going to change this, and I'm going to change the color on these poor highs. I'm going to make these orange, right? So I'm going to be coming out with a little video on what is a poor high, what is a poor low. But for now, I just kind of want to guide you through on what you're going to be up against. Because if you're going to be switching over from crypto to futures, you're really going to have to be aware of this stuff, because these are going to be your reactive levels. These are going to be the levels that you're getting your basic TA from. And this right here is very important, a poor high. What is a poor high? So as you can see here, when you have an SFP, when you're looking at value, you are going to see a nice, good, solid line when you have a finished high. When you have a poor high, you're going to see this. It's very blocky. This means that price came up here. It spent a little time, but it didn't really SFP. The bigger trader didn't get involved. It's not finished yet. So you would want to mark these out, and you would want to say to yourself, this is a poor high, right? Or yeah, maybe a poor high. You would go through this and you would do the same process, right? And then, so really this is your naked value area high, naked value area high. So this, I right click on this. I've got my naked weekly value area high, and then another naked weekly value area high. How you do this is you basically just make your line, right? So I say this is my naked weekly value area high. I get the color, I get the style, I get everything. And then I'm going to right click on this, and I'm going to go to templates. Now, if I click save as, this is going to ask me to name this template. Once I name it, it's going to take the color, it is going to take the thickness, it is going to take everything, and it's going to make it so I don't ever have to do that again. So then if I ever want to come to anything, if I just make a line, right? Boom. If I want this to be a point of control, I just right click. I've already got it pre-programmed. Everything's here. Key level, monthly level, naked daily point of control, blah, 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 blah. This is really going to help you flow through your charts better and everything. And then, of course, you always want to make these files. Utilize this so your stuff is very organized. Your trading view is your war chest, right? So that way, if I'm going to get out of this TPO, now if I want to introduce back the candles, now I can start to stack up my TA, right? I can start to see where's my next trade zones, right? Where are my high time frame levels? And all of this, and then you're just using basically your basic TA. Wherever levels are stacking up, you're looking for a response, and then you're looking to apply your strategy. We're going to go over some of this, guys. If there's anything that you didn't understand, and if there's anything that you want to see, please put it in the chat, hit me up, DM me. But this is going to be my year where I am fully exiting crypto and Bitcoin and getting into the futures market. The futures is just so much better as far as liquidity. I mean, how many times have you been in a Bitcoin trade and then you were in profit and that trade closed in profit and you actually lost money? It's the reason because the liquidity and just funding rates, it's really just crap. I got to tell you that if you're seeing some success in trading crypto and you really want to transition over to the futures market, you are going to see so much more profit, right? We're going to be getting into in the coming weeks into tick sizes, into how to get an exchange. Me personally, I am trading through AMP. I applied, I got my trading account approved. From there, I have to fund my account. You're going to find that when you fund your account, gone are the days of you avoiding taxes anymore. You're going to have to give these people social security number, bank. I mean, it's very, very rigid. So leave some money to pay your taxes because you're not going to be able to avoid it. Once you get your trading platform, whatever trading platform you choose, then you're going to have to link up whatever you're going to trade through. For me personally, I'm going to be doing this through ATAS. Through ATAS, I'm getting a CQG feed. So then I'm linking up my ATAS with my AMP account, and then that is going to give me the ability to not only trade, but it's going to provide the spread and everything. I like ATAS. It's pretty good. It's low latency. The response time, really what you want is you just want reliable price action. You don't want any gaps. You don't want something that's patchy or blotchy, and you want something that really can provide the volume and just the current price action. You can trade through TradingView. Is it going to provide you the best reactive levels? Probably not. TradingView is kind of an all-in-one platform. It's the jack of all trades. It's not really mastering that price action, as you can even see right now. Price action is just not super reliable. Oh, this entered into my zone here, and I didn't make it. Anyways, but trading from crypto to futures is possible. You will see a lot of benefits right away, and this channel is going to be transitioning along the way. But in the meantime, I want to tell you guys that I am in a Bitcoin short, and I will tell you why I'm in a Bitcoin short and where I'm in a Bitcoin short. Shout out to my girl Jen. We did a live session today. We were trading live. If anybody wants to trade live with us, please just hit me up in the chat. So basically, this was basically based off of, we're trading in this parallel channel, undeniable. If I bring up my local range, I can see here that we did have a back test of the value area high. This back test on the value area high was decent volume, right? And there was some trap traders in there. So for me, I took the short because I had a low risk, and my target first off is going to be this point of control. From there, if we do not see a bounce and a change on that point of control and continue to the upside, I think that we will come on down here and complete this value area high, value area low rotation. So I did see the opportunity. I woke up today. I weighed out the trade. The risk to reward was good. This trade is in profits. My stop loss is right here above this high, and I am aware that there's an anchored VWAP up here above the high, so we might come on up here. But one of the things that I want to tell you guys, just like I was telling Jen today, is that a lot of people are just trading on emotion. They're trading on feeling. They're trading on everything. And I'm going to tell you that you are going to lose a lot if you do this. You have to become a highly competent person as far as it comes to technical analysis. And I'm going to make technical analysis real simple. It's basically just who's in control, who's in pain, where's the market trying to go, and does it have a reason to go there? Keep this market as simple as possible and then add complexity. Just keep it very simple and stay away from opinions. One of the things that I was talking to Jen about this morning was, one of the first things that I have to know when I'm trading is, where am I wrong? And I answered that quickly. I was talking to my friend today, and I said, I'm in a short. And she said, I'm in a short too. And I said, where's your invalidation? And she said, huh? If you don't have immediately an invalidation, then you're always going to bleed because price is going to drift past and then you're going to be in the red and you're not going to have a strict set of rules. So one of the things that I want to highly influence you to do is treat your technical analysis like chess. In chess, pieces can't randomly appear. It has strict rules. Every piece has to move in a certain direction and you only get to move, right? Once you enter into a trade, you should shift your mind into poker, right? In poker, all that matters is the next card. And you're weighing out your cards to what is the probability of you beating people. So when you're doing your technical analysis, it should be chess. You should have strict rules. My theory is that this market is going down. My target is here at this point of control. My logic is that we SFP'd this high and we're going down here where the peak sellers and buyers are. There was trap traders here. That is it. So if I enter into a short, now I have my chess game that's giving me my validation. So I don't need to think. I just need to say, if price goes above here and finds acceptance, I am wrong and I am out. That's it. If price gets to here, I am going to take profit. That's it. Once you get into your trade, then you're thinking about it like a poker game. Then you're thinking, okay, let me see what the next candle brings. If the next candle brings some up, I don't have to get scared because I always have my chess analysis. And my chess analysis is this is where I'm right and this is where I'm wrong. And that's it. Once you're in the trade, you're in the trade. How many times have you closed out a trade early because you were just not thinking chess analysis, poker during your trade? Oh, this might go up. Yeah, it might go up and it might go down. That's why your analysis has to have strict rules. And then when you're going, it doesn't matter. Sure, you're monitoring it, but you're only monitoring it against your strict set of rules. So that's a lot to swallow. I want you guys to absorb on that and get in the chat. Let me know if you have any questions. Thanks for tuning in and we'll see you next time.